Hello, and welcome back to your next lesson of the Accelerated Investor Program with me, Warren Jeffery. Over the last few lessons, we've been looking at what you need to invest in to grow your 100,000 Rand to 1 million Rand. We've looked at shares, property, and even offshore shares. So today, I want to look at an asset that's a little bit different. I want to look at an asset that protects your wealth. After all, there's no point growing your wealth if you can't protect it and hold on to it. And there are few assets that can protect your wealth as well as precious metals can. That's why today we're allocating 5% or 5,000 Rand of your 100,000 Rand to investing in precious metals. Investing in precious metals offers your portfolio protection in that it is seen as a store of wealth. Why? Well, the answer is surprisingly simple. You see, when it comes to precious metals, there is a lot of work and effort required to pull one single ounce of a precious metal out of the ground. And this means there is a restriction on how much of these metals can be produced. This is what makes them rare and precious. The term precious metals refers to metals of gold, platinum, palladium, and silver. And because these metals are real assets that you can hold in your hand, and governments and banks who need money can't just print more of, they are a great store of wealth. This fact is the reason metals like gold have been the currency of choice for the last 5,000 years. And it's what makes precious metals a key part of providing wealth protection in your million Rand portfolio. So, the question is, how do you add precious metals to your portfolio? Now, you could go out and buy a bit of all the different precious metals, but for my money, as a long-term investment, I like gold. Out of the different precious metals, it has the most stable demand and price. So, for our million Rand portfolio, we're going to add gold as our precious metal. There are a host of ways for you to buy gold, so let's take a moment to consider some of these. You could buy actual physical gold. Owning actual gold often conjures up a sexy image of your own private store of the yellow metal. And whether it be through owning jewelry or owning actual Kruger Rand coins, it's very satisfying holding a lump of gold in your hands. But there's a downside to actual physical gold. The problem is, gold isn't just attractive to those trying to protect themselves from savings destruction. It's also attractive to thieves. And this means holding physical gold could cost you in terms of the insurance, security expense, or even safety costs you may incur to protect your gold against theft. For me, these costs and logistics are simply too high to make it worth holding any significant amount of physical gold. So, let's consider another method to buy gold. You could buy gold mining shares. Now, the idea of owning your own piece of a gold mine is very exciting, and if you're invested in the right company, the rewards can be truly astounding. In fact, some miners can see their share prices double from a relatively small increase in the gold price. This is because when resource prices climb, the company's costs stay the same, and this means the profits for the mine can grow exponentially. But there is a danger to investing in these mining and resource companies. You see, just like the company's profits can shoot up on a price increase, they can also collapse on a price decline, or if there are work stoppages which halt production. This can quickly move the mine into a loss-making position, which could pose a significant risk to your investment. So, if you have a healthy appetite for risk and are looking for growth rather than protection, you can consider investing in mining shares. But for our million Rand portfolio, we're including precious metals like gold to offer protection for our money. And because of this, we're not going to take on any risk by investing in mining shares. So, if you're not buying physical gold and you're not buying gold miners, what kind of gold should you buy? For my money, my favorite way to own gold is through the new Gold ETF. I believe this really is one of the best and easiest ways to protect and grow your wealth with gold. The new Gold ETF is a fund with the sole purpose of holding gold. In fact, the new gold fund actually holds several tons of solid, shiny gold in a vault in London. And by buying the ETF, you get to own a portion of this massive store of gold. But there's an even bigger benefit for you when it comes to buying the new Gold ETF. Because the new Gold ETF is priced in Rand, it gives you a great hedge against a weakening Rand. How? Well, when the Rand weakens to the US dollar, like we've seen over the last few months, the Rand price of gold goes up. And that means when the Rand weakens, you actually make money from your new gold investment. To include precious metals in your portfolio, you need to allocate 5% or 5,000 Rand of your 100,000 Rand to the new Gold ETF. This will not only protect your money, but also grow it when the Rand weakens. This makes it the perfect addition for your million-rand portfolio. You can expect to get returns of around 15.78% per annum by investing in the new Gold ETF. And at this rate, your 5,000 Rand will grow by more than 432% within the next 10 years. Today, we've learned that there are basically 3 ways to invest in gold as a precious metal. You can buy the actual physical metal, you can invest in shares that actually mine the gold, or you can buy a gold ETF. For wealth protection purposes, the new Gold ETF is my preferred option to hold precious metals in your million-rand portfolio. If you want to learn more ways on how to invest in and get expert guidance on resource investments, make sure you read all about the great resource opportunities Jeffery reveals in his Resource and Scarcity Report. To learn more about the Resource and Scarcity Report, which will teach you how to turn rare resource opportunities into real profits, simply follow the link at the end of this lesson or visit the resources section of this website. That's it for this lesson of the Accelerated Investor Program. Make sure you join me for the next lesson, where we'll be looking at how you can make sure you never ever run out of money. Until then, here's to staying ahead of the game.